FOMO is one of the main aspects that's pushing the price to the upside.
Why actually there's so much FOMO in gold right now?
When you see any instrument pumping, everyone wants to jump in. But when it's pumping for so long, it's very difficult to time when is the correct time to jump in.
Another theme that is actual is the confrontation between Donald Trump and the Fed, actually, Jerome Powell. So what do you think of that?
President Trump has been vocal on how he wants lower interest rates. He wants the Fed to push the rates down, right?
Finally, they pushed it down.
Yes, finally they did, yeah.
How do you think traders can navigate all this? So where were opportunities, or where there were opportunities? Hello and welcome back to our weekly episode of Exness Trading Talks. Last week we discussed commodities and equities, why some are considered safe havens, and some key triggers that moves the money between the two. Now for this week we are going to talk about Trump's second term, tariffs, and how various policies affect fundamentals. If you haven't done so already, you can subscribe to our channel and turn on notifications to be the first to know when the next episode of Trading Talks is going to be released. Today we have a special guest, Antreas Themistokleous. Hello, Andreas.
Hello, Stan, and thanks for inviting me.
So the first question for you, when you look at the first year of the second term of US President Donald Trump, how much of the campaign rhetoric has been translated into the real economic policy? So, because there are a lot of talks.
Yeah.
So how do you think?
Yeah, so in his election campaign, let's say, President Trump had a lot of campaign rhetoric, right? He was mentioning reindustrialization, border control, stronger dollar, tax incentives, deregulation, anything. So from what he was talking about to what actually took place was kind of different stuff, right? So we got only tariffs, which was, reindustrializing America, and a ton of presidential orders, executive orders, right? So the stated goal was to protect the American industry, right? So in practice, however, we are seeing higher costs due to tariffs mainly, and restricting supply chain because of that increasing cost. And also we had retaliation from trading partners. If you remember, back in April of 2025, Trump had this big picture with countries with different percentages of new imposition of tariffs, right? So we had a lot of backlash from different trading partners. One example that stood out to me was how this retaliation pushed some countries together that were not necessarily doing any trading activity before, like South Korea, China, and Japan. Historically, these three countries were not doing business, essentially, to not say hate each other, quote unquote. But all this tariff had this big retaliation from different trading partners.
Do you think that it's actually changed anything in the economy? So how it moved the needle economically?
Yeah, so tariffs, the short term is yes, they moved the needle economically because, again, they tightened the supply chain and boosted the import cost. So any company that deal with rely heavily, let's say, on imports, like large retailers or food, clothes, shoes, anything that has to do with retail in general, had a big impact on that, especially also manufacturing. But the US economy is too diversified, let's say, to be affected by tariffs alone. We also had other aspects, but yes, tariffs in general had moved the needle economically, yeah.
So how did it affect the markets in general? So where were opportunities, or where might be opportunities thanks to that or because of that?
Yeah, so in the short term, let's say, I would suggest some price spikes, plated price spikes, especially when it comes to metals or energy, right? We've seen how gold has been reacting, silver is in all-time high. We're gonna check the charts later on, and also energy, for example, natural gas and crude oil for the short term. For the longer term, for like swing traders or more long-term traders, I would say probably focus on US steel, aluminum, anything that has to do with industrial materials in general, because tariffs, increase costs for manufacturing sector most of the times. So for longer trades, I think, these industries have some opportunity.
Another theme that is actual is the confrontation between Donald Trump and the Fed, actually, Jerome Powell. So what do you think of that? So will this pressure on the Fed influence the markets?
Yeah, it's true that the relationship between the Trump administration and the Fed has been tense, right? President Trump has been vocal on how he wants lower interest rates. He wants the Fed to push the rates down, right? It doesn't matter.
Finally, they pushed it down.
Yes, finally they did, yeah. So a lot of the move is influenced by the Fed, yes, but not all of it. Mostly expectations of monetary policy tend to move the market more than the actual release, because through the FedWatch tool, for example, we can see the probabilities forming before the actual release, right? So expectations move the market. So yeah, the Fed, to a great extent, it affects the whole move. On the other hand, we also have fundamentals. However, we have let's say GDP, inflation data. We have all of these fundamentals also supporting the moves.
By the way, speaking of the pressure on the Fed, you can click the link in the description of this video and get to the article where you can read it in a text mode. All right, let's continue. So the term of Jerome Powell ends in next year, so maybe before that the situation might actually remain. But let's see what will happen. How do you think traders can navigate all this? Where are opportunities, or where maybe there were opportunities to trade?
Yeah, so I think when it comes to Fed, again, I will separate to short and long-term traders. For short-term, I think if you play the Fed story, I mean, trade the probabilities, trade, for example, the shifts in sentiment when it comes to Fed probabilities, you can lower your position sizing, adjust your stop losses for volatility. So in the short term, just play the Fed story, and I think there is some opportunities there. But for the medium to longer trade, I think you need to base on fundamentals and valuations, for example, when it comes to equities.
And so how are valuations, by the way, and fundamentals this year in general?
So when it comes to it breaks down to different categories like US growth, inflation, jobs, asset prices. So when it comes to growth, US growth, it's kind of mixed. The Trump policies have somewhat moved the US growth when it comes to, for example, headline GDP. Headline GDP has shown resilience. It's been somewhat more stickier than expected. That's why the Fed was so reluctant in lowering the interest rates in the first hand. But different economic models and macros see tariffs trimming growth in 2025 and 2026. So inflation, obviously, tariffs are inflationary, so a lot of effect there. And when it comes to the job market, it's kind of medium effect, because some industries have gained in terms of job gains in so-called protected industries like steel making or metal making in general. But we see that overall payrolls and unemployment are somewhat negative. So one goes up, one goes down. So yeah.
So it's kind of mixed, right?
Yeah.
So I suggest that we might go to charts and to see how actually the situation affected the charts. For example, gold. So what do you see there?
Okay, so what we see on the gold chart is quite extraordinary, because we just see an aggressive bullish rally with no signs of slowing down anytime soon. From the technical perspective, it's testing the upper band of the Bollinger Band. So what that means is that we have too much volume, right? So this extensive bullish rally, it's quite difficult to time when to jump in.
I call it super FOMO rally.
Yes, exactly. Because FOMO is one of the main aspects that's pushing the price to the upside, right? I think it's like, 40-year...
Why actually there's so much FOMO in gold right now?
Because it's when you see any instrument pumping, everyone wants to jump in, right? But when it's pumping for so long, it's very difficult to time when is the correct time to jump in, because you cannot jump in at all-time highs, for example.
I mean, why is so much tension? So why they would want to get into gold so desperately?
Yeah, because as we know, gold is a hedge. It's a safe haven asset, right? We see all these geopolitical tensions going on around the world. Everybody wants to go to gold to safeguard the value of their funds. So it's the number one trading instrument, for now. So everybody wants in, right?
Yeah, it's true. All right, let's see how this year will finish, and whether or not this FOMO rally will proceed. Thank you, Andreas.
Thank you very much, Stan.
And thank you for watching, and hopefully have a clearer picture on what policies actually went into effect and how it affected the markets. Remember to subscribe to our channel to get notified about our next episode on trading psychology.